Welcome back to the Deep Dive. We're the show that, cuts through the noise, digs into the data, and really tries to give you the insights you need to stay ahead.
That's the goal.
And today, we are tackling a really big question, one that's been making waves, generating some serious buzz in the crypto space. Can Avalanche AVAX actually rally to $50? It's a target a lot of people are talking about, maybe thinking is within reach.
It's definitely ambitious.
So we're going to do a comprehensive deep dive. We want to figure out exactly what it would take for AVAX to hit that $50 mark. Not just as a number, right? But as a real statement about where it sits, how it's evolving in that whole layer one landscape.
Absolutely. And our mission today really is to give you the full picture. We're going to unpack, where Avalanche is right now in the market context.
Okay.
Then we'll dig into its core tech strengths, what makes it tick. We'll pinpoint the biggest catalysts, the things that could actually push it forward.
Potential fuel.
Exactly. And crucially, we have to look at the challenges, too, the hurdles it needs to overcome. We've got a really solid stack of sources to guide us here.
Good stuff.
Yeah, everything from detailed market analysis, think firms like Masari, official announcements from Avalanche itself, and big partners like AWS.
Right, the big names.
We've got deep dives into that unique subnet architecture, which we definitely need to unpack, and on-chain data, too, from places like DeFi, various analytics platforms. So we're connecting all these different dots, pulling insights from multiple angles to give you, hopefully, a really comprehensive understanding.
Perfect.
And look, this deep dive is for you. Whether you're already tracking Layer 1 super closely, maybe you're looking for that next aha moment about where Web3 is heading, or maybe you're just getting curious about the next big potential moves in crypto. We think this will be valuable.
Okay, let's unpack this then, right from the start. Where does AVAX actually stand today?
Yeah, good question. So as we're recording this, AVAX is, let's say, hovering around the $30 mark, give or take.
Okay, $30. Now, anyone who's been in crypto for, well, more than 5 minutes
Yeah.
knows that volatility is just the name of the game, right? It's wild out there. And AVAX has had quite a ride. We've seen it hit heights way over $100 back in those, euphoric bull run days.
Oh, yeah, I remember that.
But we've also seen it dip way down single-digit prices during the bear markets that followed. So it's seen both extremes.
Definitely. It's weathered the storms.
So what does that mean for our $50 target? Where does that sit in context?
Well, getting to $50 from where it is now, around $30, that would represent, let's see, roughly a 67% increase.
67%, okay.
Which, look, it's a significant move, no doubt about it, but in crypto, it's far from unprecedented, especially for a project like Avalanche that has, a certain pedigree and history.
Right, it's not like it's starting from zero.
Exactly, and what's fascinating here, I think, is that the $50 mark isn't just some random number people pulled out of a hat for speculation.
It feels significant.
It really does. It carries like a heavy psychological weight, and a technical one, too. Investors often see it as a key resistance level, a barrier.
Okay.
And if it breaks through that barrier convincingly, that can signal renewed confidence in the market, maybe unlock further upside. It becomes a new floor, potentially.
Interesting. And where does Avalanche sit in the big picture compared to the other layer ones?
Well, it's consistently positioned itself among the top contenders, in that layer 1 race. Obviously, Ethereum, ETH is the undisputed king, no question.
The giant.
But Avalanche is often talked about in the same breath as its closest rivals. Think Solana, SOL, Cardano, ADA, maybe even some of the newer modular chains. They're all fighting for market share, for developers, for users.
It's a competitive space.
It is. So the question isn't just if it can hit $50. It's really what specific mix of factors, what confluence of events would actually propel it there. And just as importantly, what would hitting that number mean for its standing among these heavyweights as we, look towards the next cycle?
When I first started looking into Avalanche, like a lot of people, probably, I focused on the speed and the low fees, which, don't get me wrong, they're impressive.
They definitely are.
But as I dug deeper, it was really the subnet architecture that felt like the true aha moment for me. This is where I think it gets really interesting.
Yeah, I agree.
It feels like Avalanche isn't just another blockchain trying to be faster. It's got this unique trick up its sleeve, right? A fundamentally different way of thinking about scalability and customization.
That's spot on. Its core strength, really, is that subnet architecture. Instead of one single monolithic chain trying to handle absolutely everything for everyone, which often leads to bottlenecks.
Right, like rush hour traffic.
Exactly. Avalanche lets developers create what they call subnets.
Okay, subnets. Explain that a bit more.
So think of subnets as like Highly customizable, application-specific blockchains. They run on top of the main Avalanche network, and importantly, they're secured by it.
So separate but connected.
Precisely. Each subnet can be meticulously tailored for whatever specific use case it needs. It can have its own rules, its own gas token even doesn't have to be AVX, and even its own dedicated set of validators if needed.
Oh, okay.
And this is, well, pre-revolutionary because it directly tackles that one-size-fits-all problem you see with a lot of the established layer ones.
Right, like Ethereum tries to do everything.
Yeah, exactly. A main network like Ethereum has to juggle the incredibly diverse needs of countless steps, right? You've got complex DeFi, high-volume NFT markets, gaming, enterprise stuff starting to emerge.
That's a lot for one network.
It is.
Yeah.
And that often leads to congestion, those high fees everyone complains about, and just compromises in performance, especially when demand spikes. Subnets offer a way around that.
So if a traditional blockchain is like that single jam-packed highway trying to fit supercars and delivery trucks and everything else,
Yeah.
subnets are more like a series of specialized express lanes, each one optimized for its own kind of traffic, one for racing, one for heavy cargo, maybe one with special tolls or access rules.
That's a fantastic analogy, exactly. And the flexibility that offers is a huge differentiator.
So what kind of applications really shine with this?
Well, think about a big enterprise. They might need a permission subnet, right? With really strict compliance features built in, maybe KYCAM-L integration, specific data privacy controls, things that are really hard, maybe impossible to do properly on a public chain without making big compromises.
Makes sense for regulated industries.
Totally. Or think about a high-end gaming studio. They could launch their own subnet optimized for crazy high transaction speeds, maybe custom gas fees paid in their game's own token, not AVX.
Oh, interesting. So the game economy stays within the game.
Exactly. It allows them to create these really immersive, real-time gaming experiences without getting bogged down by, some unrelated NFT mint happening on the main chain. And the economic activity, the gas fees, flows back into their ecosystem.
That's clever.
And the beauty is, these custom environments don't drag down the main network's security or efficiency. Because the core set of Avalanche validators, the C-chain validators, they secure all these subnets, so you get customization without sacrificing that core security.
Okay, that's a really powerful concept. And it's not just about the architecture, right? It's also about the raw performance that this enables.
Yeah.
That translates into a better experience for users.
Absolutely. Avalanche boasts some really blazing speed and efficiency. We're talking a theoretical peak capacity of around 4,500 transactions per second TPS.
4,500. How does that compare?
Well, put it this way. Ethereum, even after the merge, still kind of hovers around maybe 15 to 30 TPS on its mainnet.
Big difference.
Huge difference. And on top of that higher throughput, Avalanche achieves sub-second transaction finality.
Sub-second. What does that mean exactly?
It means once you send a transaction, it's confirmed and irreversible finalized in less than a second.
Wow.
And that's not just a cool technical spec, it's a genuine game changer for any kind of real-time application.
Yeah, you can see how important that would be.
The importance of that sub-second finality for just like practical everyday use cases, you really can't overstate it. Imagine trying to play a fast-paced Web3 game.
Or making a quick trade.
Right. Or even just a simple point-of-sale purchase. If you had to wait minutes for every single action to confirm, it would be totally unusable, like trying to use the internet on dial-up again.
Yeah, nightmare fuel.
Avalanche's speed and finality really unlock completely new types of applications that just demand that instant feedback. And beyond the speed, there's the other critical piece, cost.
Yes, the gas fees.
Exactly. Avalanche's transaction fees are significantly lower compared to Ethereum's, often by orders of magnitude. We're talking cents, sometimes fractions of a cent, versus potentially tens or even hundreds of dollars on Ethereum during peak times.
That's a massive difference.
It makes it a much, much more cost-effective alternative for so many operations, especially if you're a user or a dApp doing a high volume of transactions. Those Ethereum gas fees can add up incredibly fast and become totally prohibitive.
So that economic advantage must attract users and developers then.
Absolutely. It often directly translates into higher user adoption and more interest from developers who want to build applications that people can actually afford to use frequently.
Okay, so we've got this really strong foundation, right? Innovative architecture with subnets, impressive speed, low costs. Seems like a solid base. So what could truly light the fuse? What could propel AVX towards that $50 target?
Yeah, let's get into the catalyst. This is where it gets exciting.
Let's start with something that feels really tangible. institutional adoption and those big strategic partnerships. This is where Avalanche seems to have made some serious headway, validating its tech beyond just the crypto bubble. We're talking real-world use cases here.
Indeed. And one of the earliest and arguably one of the most impactful partnerships was the one they forged with Deloitte. This was back in 2021.
Deloitte, the huge consulting firm.
The very same. They chose Avalanche to build a platform for FEMA, the Federal Emergency Management Agency in the U.S., specifically to streamline how disaster reimbursement applications are handled.
Wow, okay, FEMA. That's serious stuff.
Absolutely serious. This wasn't some small proof of concept or pilot project. This was about building critical infrastructure for a high-stakes government agency dealing with, incredibly sensitive situations.
So what does that partnership tell us?
Well, what's fascinating here is how it validated Avalanche's reliability, its security, its scalability for these real-world mission-critical applications that go way beyond just, speculative finance or NFTs.
Right. This isn't DeFi kingdoms.
Exactly. This was about improving transparency, efficiency, auditability in a process that directly impacts people recovering from disasters and involves public funds. And if we connect this to the bigger picture, this kind of institutional adoption signals a really profound shift in how blockchain tech is perceived more broadly.
How so?
It moves it from being seen as just niche experimentation to being recognized as a trusted, enterprise-grade solution capable of handling sensitive, real-world data and complex workflows. It's like a stamp of approval, right? That resonates deeply with traditional finance, with large corporations that are often quite risk-averse.
That makes sense. A big stamp of approval. And it wasn't just a one-off thing either, was it?
Not at all. Fast forward to early 2023, and Avalanche announces this massive collaboration with Amazon Web Services, AWS.
The absolute giant in cloud computing. Everyone uses AWS.
Pretty much. And AWS chose Avalanche as a preferred blockchain provider for enterprise Web3 solutions. What that means, practically, is they made it significantly easier for potentially millions of AWS users to launch and manage Avalanche nodes, and crucially, subnets.
Okay, wait, so AWS is basically making it plug and play to run Avalanche infrastructure.
Essentially, yeah. The implications are just enormous. This dramatically lowers the barrier to entry for enterprises wanting to adopt Avalanche. Because AWS offers that robust, familiar infrastructure that companies already trust. Unparalleled scalability, a whole suite of developer tools that traditional businesses are already comfortable using.
Right, so they don't need to become blockchain experts overnight.
Exactly. Think about a CIO at a big company. They might have been hesitant about blockchain because of volatility concerns, perceived security risks, the complexity of integration. But AWS provides this trusted, familiar environment.
It de-risks it for them.
Completely. What could have been a complex, maybe months-long blockchain deployment project, now it becomes a service you can spin up relatively quickly, maybe in days, backed by enterprise-grade service-level agreements, security protocols they understand.
That sounds like a huge vote of confidence.
It's monumental, not just for Avalanche, right, but for the entire Web3 space moving towards that mainstream enterprise integration. AWS providing the backbone, streamlining deployment. It simplifies security, maintenance, compliance, huge hurdles normally for big organizations dipping their toes into blockchain.
So it legitimizes Web3 for the big players.
It effectively does, yeah, for the whole Fortune 500, potentially. It positions Avalanche as a key enabler for that transition. It shows Avalanche isn't just building for the existing crypto community, but really aiming for the entire global economy, positioning itself as a potential foundational layer for the next generation of internet services.
And are we seeing others follow suit? Other enterprises?
We are. We're seeing other global enterprises, from financial institutions exploring tokenization, which we'll get to companies looking at supply chain innovations, actively exploring and utilizing Avalanche. It underscores that growing appeal in traditional business sectors. This kind of broad adoption, integrating blockchain into the core operations of global corporations. That's exactly the kind of fundamental driver that can lead to substantial, sustained value growth for AVAX.
Okay, so beyond these really impressive partnerships with established players, there's another massive catalyst area, right?
Yeah.
One that's maybe more exciting for the next generation of internet users. That booming Web3 frontier of gaming and NFTs.
Oh, yeah, absolutely. Huge potential here.
Avalanche seems to have strategically positioned itself as a really natural and compelling home for Web3 games. We talked about the speed, the low fees.
Which are critical for gaming.
Exactly. It makes it incredibly attractive for those high-throughput, real-time gaming experiences where you need quick actions, low latency, cheap and frequent transactions. That's paramount for a good game.
Totally.
And we're not just talking about, like, static digital collectibles here, are we? We're talking about entire virtual economies being built, persistent worlds, complex player-owned assets, all running natively on Avalanche.
That's the vision, exactly. And we're seeing major projects commit games like Shrapnel, for example.
Shrapnel. Tell me about that.
It's a highly anticipated first-person shooter. They're aiming for a proper AAA gaming experience built with Web3 principles from the ground up.
Okay, AAA quality on blockchain, that's ambitious.
Very ambitious. And then you have projects like DeFi Kingdoms.
Ah, DeFi Kingdoms, I've heard of that one. Kind of a mix of gaming and DeFi.
Exactly. It's a popular play-to-earn fantasy RPG that blends gaming mechanics with decentralized finance elements, and they've made a significant commitment to Avalanche, launching their Crystal Vale realm there.
So these aren't just small experiments. These are significant games choosing Avalanche.
Right. And it's not just about putting their game items on a blockchain as NFTs. It's about building these complex, interactive worlds where those in-game items are truly owned by the players, where governance can potentially be decentralized, where the in-game currencies are native tokens with potential real-world value.
And their presence on Avalanche helps the network how?
Well, their expansion onto Avalanche isn't just a tech choice, right? It significantly boosts the network's visibility. It drives organic user adoption, bringing in potentially millions of gamers from the massive global gaming community. And it showcases the practical utility of Avalanche's infrastructure for these really demanding applications.
So more users, more transactions.
Exactly. These games bring new users and transactions directly to Avalanche. That creates consistent organic demand for AVAX, for gas fees, maybe for subnet fees if they run on one, other in-game economic activities. It forms this really powerful growth flywheel. Game attracts users, users transact, demand for AVX increases.
Gotcha. Okay, that makes sense. Then there's the, let's call it the engine room of the crypto world, DeFi. Decentralized finance. What's happening with DeFi expansion and ecosystem growth on Avalanche?
Yeah, DeFi is always crucial, and we are seeing a pretty significant and encouraging trend right now. Liquidity seems to be flowing back into Avalanche ecosystems as the broader market shows signs of recovery, and importantly, as builders on Avalanche continue to innovate.
So the money's coming back.
It seems that way. The total value locked, or TVL, within Avalanche DeFi protocols, that's a really critical metric to watch. And we're observing renewed interest from users, from developers, and from capital.
Are there specific platforms driving this?
Yeah, definitely. Prominent DeFi platforms like Trader Joe, for instance, they're known for their innovative decentralized exchange, DEX, and lending solutions. They keep pushing boundaries.
Trader Joe.
And then you have Pangolin, which is a longer-standing DEX on Avalanche. These platforms, and others like them, provide those essential financial services, swapping tokens, lending, borrowing, yield, farming opportunities. All of this collectively enhances Avalanche's overall utility, its liquidity, and makes it more attractive for capital to come in.
So a healthy DeFi scene is like a magnet for money.
It's a powerful magnet, exactly. When users and protocols are active on Avalanche, doing swaps, staking their assets, lending, they create this natural and sustained demand for AVX.
How so? Why AVX specifically?
Because AVX is used not only as the native gas token for transactions on the primary network and potentially some subnets, but it's also often used as collateral in various DeFi applications, think lending protocols. And it's also needed for staking to secure the network and potentially secure subnets.
Ah, okay. So multiple uses for the token itself within DeFi.
Right. It's this symbiotic relationship. Ecosystem growth directly fuels demand for the AVX token. And that is absolutely critical for the long-term success and value accrual of any Layer 1 blockchain.
Okay, this next catalyst feels different. It's a concept that really bridges the digital world with the physical world, and it seems to be gaining serious traction, especially with traditional financial institutions.
Ah, you must mean the tokenization of real-world assets. RWAs.
Exactly, RWAs. This could be absolutely massive, couldn't it? One of the biggest transformations blockchain could bring. And Avalanche seems to be positioning itself right at the forefront here.
It really does, and the potential is just staggering.
So what's happening? Are firms actually doing this on Avalanche?
Yes. We're seeing firms actively exploring and, importantly, piloting the tokenization of a huge array of assets. We're talking bonds, real estate, private equity funds, even things like intellectual property. And often they're looking specifically at Avalanche's subnet architecture to do it.
Why subnets for RWAs?
Because tokenization allows these traditional, often quite illiquid assets to be represented as digital tokens on a blockchain, that simple step unlocks so many benefits.
Like what?
Like fractional ownership, for one. Suddenly, you can buy a small piece of a commercial building or a private equity fund, which democratizes access. It can significantly increase liquidity because these assets could potentially trade 247 on global markets. And it vastly improves transparency and auditability because you have that immutable record on the blockchain.
And institutions like this, why? Efficiency.
Efficiency is huge. They're deeply drawn to the potential for faster settlement, streamlined record keeping, easier compliance. It could cut out layers and layers of intermediaries. Imagine a corporate bond, right? Issued, traded, settled almost instantly. Interest payments automatically distributed via smart contracts, all without the delays and costs of traditional clearinghouses.
Okay, that sounds revolutionary for finance.
It really could be. And Avalanche's subnet architecture is particularly well-suited because it allows for those permission subnets we talked about. Environments that can meet the extremely strict regulatory requirements, the privacy needs, the specific compliance features that institutions absolutely demand.
So they can build walled gardens, essentially, but on blockchain rails.
Kind of, yeah. Custom, isolated environments perfect for managing sensitive financial data, adhering to complex legal frameworks, ensuring the security needed when you're talking about potentially trillions of dollars worth of assets.
Trillions.
Literally. The tokenization of RWAs has the potential to bring trillions upon trillions of dollars from traditional finance onto blockchain networks. It could fundamentally reshape capital markets.
Yeah.
And Avalanche is making a very compelling case as a preferred platform for this monumental shift.
Wow. So this isn't just about crypto anymore. This is about representing the entire global economy digitally.
That's the long-term vision. It's a truly transformative opportunity, and it represents a massive fundamental potential value driver for AVAX if they can capture a significant piece of that RWA market.
Okay, so we've laid out this really robust tech foundation, these powerful accelerators, partnerships, gaming, DeFi, RWAs. It sounds like a strong case.
Yeah.
But let's pause for a second before we get totally swept up in the bull narrative.
Always important.
Yeah. Let's understand what hitting $50 really signifies.
Yeah.
Why does that specific number matter, beyond just seeing it pop up on CoinGecko? What does it mean for Avalanche's position and resilience?
That's a great question. Because if we connect this to the bigger picture, $50 isn't just arbitrary. As we touched on earlier, it acts as a very significant psychological and technical barrier for a lot of investors, retail and institutional alike.
So breaking it is a statement.
It's a statement. Breaking through that level, especially if it holds, often signals renewed upward momentum. It can trigger fresh buying activity from people who watch charts, who maybe wait for confirmation before jumping in.
Technical traders.
Exactly. From a technical analysis standpoint, moving past a previous major resistance level, like $50, often establishes it as a new level of support, which hints at potential further upside if that breach is convincing and sustained. It basically tells the market, okay, Avalanche has the underlying strength and demand to overcome this hurdle.
And what about its place among competitors? You mentioned Solana earlier.
Right. Critically, I think a move to $50 would push Avalanche firmly back into that top-tier Layer 1 conversation, especially when you view it relative to Solana. Solana has often, occupied that kind of second spot in terms of market sentiment, developer mindshare, especially among the so-called Ethereum killers.
That Solana comparison is really interesting, isn't it? Because we all remember that incredible, almost vertical run SOL had back in 2021. It went to well over $250.
Crazy times.
And that wasn't just about the tech being fast, right? It was fueled by this really powerful, intoxicating narrative combined with just explosive ecosystem growth, DeFi, NFTs, particularly NFT craze back then, gaming.
They built incredible momentum.
Right. Solana created this massive flywheel effect, just sucked in developers, capital, a really passionate user base at an astonishing speed. Could something similar happen for AVX?
It's possible. A similar compelling story could potentially unfold for AVX. If Avalanche can keep executing, keep building effectively on those institutional partnerships, continue expanding its gaming footprint, really lead the charge in RWA tokenization, it could generate its own powerful, distinct narrative.
The narrative beyond just being another fast chain.
Exactly. One that convinces investors it's not just a contender, but maybe a legitimate leader in specific areas for the next wave of Web3 adoption.
No.
And hitting $50 would amplify that narrative. It also signals, more broadly, a renewed belief in Ethereum alternative. It underscores this growing conviction that we're moving towards a fundamentally multi-chain future.
Right. It's not just Ethereum and everyone else.
Exactly. Investor confidence in these high-performance alternatives, especially ones offering unique architectural advantages like subnets that can drive significant capital inflow. It can shift the whole market sentiment. It's an acknowledgement that while Ethereum is dominant, yes, there's a critical need for diverse, high-performance blockchains that cater to specific use cases or regulatory needs or technical demands.
So the market isn't necessarily zero-sum.
I don't think so. Different layer ones can definitely coexist and thrive by specializing, by carving out their own niches. A strong showing for AVAX, reaching $50, would just reinforce that idea that a multi-chain world isn't just inevitable, it's already happening. And Avalanche would be positioned as capturing a significant slice of that growing market. It demonstrates maturity, right? The realization that we need diverse solutions for Web3 to reach global scale.
Okay. But of course, in the, let's be honest, dynamic and often wildly unpredictable world of crypto,
Understatement.
it's not all smooth sailing, is it? There have got to be significant headwinds, challenges that Avalanche, like any project, has to deal with. So to give everyone that balanced perspective, let's dive into the bear case. What are the real risks involved in this journey to $50 and potentially beyond?
Absolutely crucial to look at this side. The first, and maybe the most obvious challenge Avalanche faces, is just intense competition.
We mentioned the other L1s.
Right. It is absolutely not operating in a vacuum. It faces formidable and constantly evolving competition. You've got established players like Solana, which, despite its past network stability issues, still maintains a very strong retail narrative and has impressive tech like its C-level for parallel transaction processing.
Solana still has a lot of buzz.
It does. Then you have the scaling solutions being built on top of Ethereum, the layer 2s. Think Arbitrum, Optimism. They're getting faster, cheaper, and they benefit immensely from Ethereum's massive network effects, its huge developer base, its security.
ZK rollups are coming too, right?
Exactly. The promise of ZK rollups on Ethereum could dramatically shift the scaling game entirely in the future. And we can't forget the modular approach of Cosmos. Cosmos also offers an SDK for building application-specific blockchains, kind of similar in spirit to Subnets, but emphasizing sovereignty and interoperability through its IBC protocol.
So lots of different approaches competing.
It really raises an important question. Can Avalanche carve out a sufficiently unique and compelling niche amidst all these strong rivals? Or will it just find itself in this perpetual grinding battle for market share, where any innovation is quickly matched by competitors and narratives shift on a dime?
It's a tough neighborhood.
It is. Each of these competitors brings its own strengths, its own established developer communities, its own loyal user bases. It's a constant fight for resources, for attention, for capital.
Okay, competition is fierce. What about internal challenges? You mentioned subnets are a strength, but could they also be a weakness?
That's a really insightful point. Beyond the external competition, there is a potential internal challenge that stems directly from one of Avalanche's core strengths: the risk of liquidity fragmentation across all those subnets.
Fragmentation, how so?
Well, while the flexibility of subnets is, as we've highlighted, a massive advantage for specific apps and enterprises, paradoxically, it could lead to liquidity money, value being spread out too thinly across many different, potentially quite isolated chains.
Okay. So instead of one big pool of money, lots of little puddles.
That's a good way to put it. Imagine if every major dApp, every big enterprise, launches its own sovereign subnet, maybe each with its own specific gas token, its own distinct user base. It could actually make it harder to aggregate value and liquidity back on the primary C chain.
And why is aggregated liquidity important?
It often fuels powerful network effects. Think about DeFi on Ethereum. A lot of its strength comes from having massive, deep liquidity pools that everyone can tap into. If liquidity is fragmented on Avalanche, it might hinder those network effects. Users might find it more complicated or maybe more expensive to move their assets seamlessly between different subnets. Protocols might struggle to find deep enough liquidity pools for certain trades or to bootstrap new ecosystems if capital is constantly being siphoned off into these smaller, specialized environments.
So the strength customization could lead to a weakness fragmentation.
It's a very valid concern, and it's something Avalanche is actively working on addressing, to be fair. While that customization is immensely powerful, managing it effectively, ensuring seamless interoperability between subnets, maintaining a cohesive user experience across potentially hundreds or thousands of subnets, That's a complex technical and economic challenge.
So they need good bridges between subnets.
Absolutely. If liquidity does become too fragmented, it could dilute the overall appeal and efficiency of the Avalanche ecosystem for certain users or applications that really rely on that aggregated capital and robust cross-chain communication. The critical question becomes, how does Avalanche facilitate seamless, trustless, and cost-effective asset transfer and communication between these subnets to prevent them from becoming isolated silos?
Right. They need to connect the puddles.
Exactly. Things like standardized cross-subnet messaging protocols, robust bridging solutions, these are paramount to ensuring the ecosystem remains interconnected and valuable as it scales horizontally. Without that, the strength of many specialized pawns might not actually equal the power of one big interconnected ocean.
Okay, that's a really key challenge to watch. And finally, we absolutely cannot ignore the big picture, right?
Right.
The broader macroeconomic risks that just hang over everything, especially crypto.
Yeah, the elephant in the room, always.
Even the strongest project, the best tech, the biggest partnerships, they can all get sideswiped by the wider economic tides, can't they? And Avalanche is definitely no exception.
Absolutely not. We've seen it happen again and again. External factors like aggressive Federal Reserve policy, right? When they hike interest rates quickly to fight inflation, that tends to suck liquidity out of riskier assets, and crypto is definitely seen as a risk asset.
Money flows to safety.
Exactly. Or just broader risk-off sentiment spreading through traditional finance, maybe triggered by geopolitical tensions, a war somewhere, or just a slowdown in global economic growth. Those things send seismic ripples through the crypto market, too.
We could just enter another prolonged bear market.
That's always a possibility. Another general crypto bear cycle may be longer or deeper than people expect, perhaps triggered by that global economic instability or persistent inflation that could significantly stifle growth across the board. It leads to reduced capital inflows. It depresses asset prices, really regardless of a specific project's underlying fundamentals or its individual bullish catalysts.
So even if Avalanche executes perfectly on its strategy,
these macroeconomic factors are often entirely beyond the control of any single blockchain project. No matter how innovative their tech is, no matter how strong their partnerships are, crypto markets, despite having their own internal drivers, are still pretty highly correlated with traditional markets, especially during periods of extreme fear or uncertainty.
so a global downturn hits crypto too.
Generally, yes. A downturn in the global economy can lead institutions, even retail investors, to pull back from higher-risk assets like cryptocurrencies, moving into safer havens like bonds or cash. It's this constant, unpredictable backdrop that every single investor needs to keep in mind when they're evaluating potential price targets, like $50 for AVX. The best tech in the world can only do so much if the overall market sentiment is just deeply negative.
Okay, super important context. Let's pivot now and get into the numbers a bit more. Let's do our data dive, try to unpack some metrics and see what the data might be hinting at regarding Avalanche's journey.
All right, let's crunch some numbers.
First off, let's think about a basic AVAX price versus volume chart. These are always insightful, right? Because they show how trading volume, the amount of buying and selling spikes around key announcements or big price moves, it indicates if there's real market interest behind a move.
This is absolutely critical, yeah. It gives you a quantitative measure of how the market is actually reacting to news or trends. For instance, if we were to look back at the AVAX chart, maybe around the time that Deloitte partnership was announced back in late 2021, we would likely see a noticeable jump and uptick in trading volume right alongside the positive price movement. And that's not just correlation, it suggests that market participants were actively buying AVAX on that news. It signals confidence in the long-term implications of that kind of institutional validation.
So volume confirms the reaction.
It helps confirm it. Similarly, maybe the Amazon Web Services partnership in early 2023, while perhaps it didn't cause an immediate insane pump in price.
Right, it's more of a slow burn.
Exactly. You might have seen a steady increase in sustained trading activity over the following weeks. That could indicate more institutional, longer-term interest building, maybe a shift in fundamental valuation rather than just short-term speculative hype.
So the pattern of volume matters too.
The pattern matters a lot. These volume spikes are kind of like market votes of confidence. But it's important to remember, while big news can give you that immediate jolt, that spike, sustained growth requires more than just one-off announcements.
It needs follow-through.
It needs consistent development, continued adoption, a robust ecosystem that actually keeps users engaged over the long haul. Volume spikes are great for short-term momentum, but the real test is whether that initial interest translates into lasting utility and real network value.
Okay, good point. Next, let's do a little thought experiment, a hypothetical. Let's imagine the market cap versus competitors if AVX actually did reach our target of $50.
Okay, let's run the numbers.
So the current circulating supply of AVX is around 370 million tokens, roughly. If the price hit $50, 50 times 370 million, that would give it a market capitalization of about $18.5 billion.
18.5 billion, okay.
Now, to put that in perspective, where would that rank it? That would place Avalanche significantly higher than where it is now. It would likely push it well past projects like Cardano, ADA, Polkadot, DOT, depending on their prices, of course, and firmly put it back among, say, the top 10 or maybe even the top 7 cryptocurrencies by market cap.
So solidly back in the major leagues.
Definitely. Still a considerable distance from where Solana, SOL, has peaked. SOL saw market caps well over $70 billion in its prime.
Yeah.
Obviously nowhere near the behemoth that is Ethereum ETH with its hundreds of billions, but $18.5 billion. It helps us visualize the sheer scale of the climb required and where Avalanche would truly stand among the giants if it got there.
Yeah, and it wouldn't just be about a higher number on a list.
Right. What would it signify?
A market cap of $18.5 billion would demonstrate really substantial capital inflow. It would show a strong, widespread belief across the market in Avalanche's future potential, across all those diverse use cases we talked about, subnets, gaming, RWAs.
And that attracts more attention.
It's the kind of leap that attracts even more institutional attention. It draws in greater developer talent because they see a thriving ecosystem. It fosters increased investor confidence. It can create this powerful positive feedback loop. It would signal to the broader market that Avalanche's unique architecture, its strategic focus, are genuinely gaining significant traction and validating that long-term vision. Market cap is really a crucial gauge of how the market collectively values the total utility and the future promise of a blockchain network.
Okay, makes sense. Now, moving on to DeFi, which we said is a cornerstone for many layer ones, we absolutely need to track the total value lock, the TVL trend. You mentioned DeFi Llama earlier as a good resource. Okay.
Yeah, DeFi Llama is excellent for this. It's pretty much the go-to authoritative source. By looking at that historical trend of the total value locked up in Avalanche DeFi protocols over time, you get this clear, dynamic picture of liquidity flowing in and out, user engagement levels, and crucially, it's a proxy for investor confidence in the ecosystem's financial health.
So rising TVL is a good sign.
Generally, yes. DeFi Llama provides this incredibly transparent and comprehensive view of liquidity. We can infer investor confidence and network utility from those trends. For instance, back during the peak of the 2021 bull market, Avalanche's TVL absolutely surged, right? It went into the tens of billions of dollars, attracting huge amounts of capital.
And then it dropped in the bear market.
Naturally, yeah. It contracted significantly during the bear market, like almost everything else.
Right.
But monitoring its recovery now provides vital insights. A rising TVL today indicates that more capital is being deposited back into Avalanche's DeFi ecosystem. People are staking, lending, providing liquidity again.
Which suggests?
It suggests growing trust in its security, increasing activity on its decentralized applications, and greater perceived utility for its native assets. A healthy, growing TVL is just a really strong indicator of overall ecosystem vitality, and it can directly correlate with sustained demand for the underlying network's token, AVAX, because, as we said, it's needed for gas, for collateral, for various protocol interactions. It's really a foundational metric for evaluating the attractiveness and the robust health of any Layer 1's financial ecosystem.
Got it. TVL is key for DeFi health. Now let's talk about a metric that's perhaps the most unique to Avalanche, the one that really reflects its core differentiator.
Ah, the subnets.
Active subnets growth. This isn't something you track quite the same way on other chains, is it? We want to chart the growth in, say, new subnet launches, but maybe more importantly, their actual usage metrics.
Exactly. It's not just about the number launch.
Like what's the transaction volume within those subnets? How many active addresses do they have? What's the value being processed within those specific tailored environments?
Tracking the number of active subnets and, crucially, their individual performance metrics is absolutely vital because it directly signals the adoption and really the validation of Avalanche's core architectural innovation.
So we want to see subnets being used, not just existing.
Precisely. We're not just looking for more subnets on a list. We're looking for quality subnets. Subnets with real-world enterprise use cases that are actually live and processing transactions. Thriving gaming economies built on subnets. Specialized DeFi protocols finding a home there.
And what does that activity signal?
An increasing number of active high-utility subnets means more specialized environments are being built and utilized. It means more transactions are potentially being processed off the main C chain, relieving congestion there. And potentially it means more demand for AVAX, either to secure these subnets through staking or maybe to pay for core chain services like cross-subnet messaging in the future. It's the ultimate proof point for the whole subnet thesis, the idea that customized, application-specific blockchains are indeed the future.
So a big enterprise launching a subnet would be huge news.
Oh, absolutely. The launch of an enterprise subnet by, say, a major financial institution, even if it's permissioned and private initially, that would signal immense institutional confidence and adoption. That drives long-term value perception.
Okay, really interesting metric to watch. And finally, let's touch on one that always gets a lot of attention, maybe some speculation, in the crypto world. It offers that glimpse behind the scenes, whale accumulation.
Ah, yes, watching the whales.
This comes from on-chain data, right?
Yeah.
Which in crypto offers this almost unparalleled transparency into market movements compared to traditional finance. You can literally see what the big players are doing with their wallets, not just what they say in interviews.
That's one of the fascinating aspects of public blockchains. Monitoring those large wallets, the whale wallets, can indeed provide some pretty deep insights into what the smart money might be doing and whether they're potentially anticipating a rally.
Who are these whales usually?
They're often institutional investors, maybe high net worth individuals, sometimes long-term project backers or VCs, or just long-term holders who have significant capital and often, frankly, access to deeper research and insights than the average retail person.
And if they start buying?
If these kinds of entities are quietly accumulating AVX, maybe over a period of weeks or months, it often suggests they believe in its long-term potential. Perhaps they're anticipating positive upcoming news or strong ecosystem growth, or maybe just favorable market shifts down the line. They're positioning themselves ahead of expected price appreciation.
So how do we track this?
You look at on-chain analytics platforms. You might look for sustained inflows into wallet addresses that are known or suspected to belong to institutions, or just a consistent increase in the number of wallets holding substantial amounts of AVAX, say, over $1 million worth.
So it reveals conviction.
It can reveal conviction that isn't always immediately obvious from just looking at the price chart or reading headlines. It offers this really fascinating peek behind the curtain at what the market's biggest players might be thinking, and potentially indicates a significant underlying shift in sentiment before it becomes widely recognized.
So the big question then is, are the big players quietly positioning themselves right now? Are they accumulating AVAX in anticipation of some of these catalysts we've discussed taking effect? This on-chain data, when you combine it with all the other metrics, the TVL, the subnet growth, the partnership momentum, it can give us a really powerful glimpse, help us understand if the smart money actually aligns with the bullish narrative we've painted for Avalanche.
It's another important piece of the puzzle.
Okay, wow. We have covered a truly immense amount of ground today. We've tried to paint this really comprehensive picture of Avalanche. We started with its core strengths, that truly unique and, I think, powerful subnet architecture, its impressive speed and efficiency. Exactly. Then we moved to those potentially groundbreaking strategic partnerships with giants like Deloitte and, of course, Amazon Web Services. Real validation there. We explored its crucial role in that burgeoning Web3 gaming frontier, dissected the importance of DeFi expansion and overall ecosystem growth as that constant engine, and we peered into what could be a transformative future with real-world asset tokenization.
Covering all the key catalyst areas.
We also tried to explain why $50 isn't just some random number, why it's such a crucial psychological and technical target for the market. And importantly, we gave a balanced perspective, looking hard at the very real risks Avalanche faces, that intense competition, the potential internal challenge of liquidity fragmentation, and of course, those unavoidable broader macroeconomic headwinds.
Gotta consider the downsides.
Absolutely. So it's hopefully a full picture of a project with, I think we can agree, immense, potentially game-changing potential, but also some significant hurdles that really demand careful consideration from anyone looking at it.
Yeah. The path to $50 for Avalanche, as we've really unpacked here, it's undeniably multifaceted, isn't it? It requires this delicate, almost intricate balance. Continued technological innovation is key. Diligently cultivating those strategic partnerships that bring real-world utility is vital. And of course, you need reasonably favorable broader market conditions. You can't swim against a tidal wave.
Sure.
We've explored the strong arguments for the bull case, really highlighting Avalanche's unique architectural edges and its growing traction in critical real-world sectors like enterprise and finance. But just as importantly, we've critically examined those significant hurdles it has to overcome, especially operating in such a highly competitive, rapidly evolving, and often just plain volatile market. Understanding all those nuanced dynamics, the pros and the cons, that's absolutely key to forming any kind of truly informed, robust perspective on Avalanche's prospects.
So with all that said, what does this all mean for you, our listener? We've laid out a lot today, and now genuinely we want to hear your thoughts, your insights. What do you think?
Yeah, what's your take?
Do you think Avalanche hitting $50 is actually realistic this cycle?
Hmm.
Or maybe you believe Solana has just carved out too significant a lead in that layer 1 race, maybe captured too much mindshare?
Good question. AVX versus SOL.
Yeah, considering everything we've discussed, the tech, the partnerships, the risks, would you personally rather hold AVX or SOL over the next, say, 12 months? And tell us why. We're curious.
Mm-hmm.
And what about subnets? Do you see them as Avalanche's undeniable killer app, the thing that will ultimately win over enterprises and developers? Or do you worry that their inherent complexity might actually be a barrier to truly mass adoption? Are they too complicated for the average user or even developer?
The fragmentation risk we discussed.
Exactly. And finally, just on a personal level, what would make you buy more AVX? What catalyst resonates most strongly with you? Is it the allure of DeFi innovation, the potential explosive growth of Web3 gaming, or is it the promise of those big transformative institutional partnerships and the whole RWA tokenization narrative? Let us know in the comments what really stands out to you.
Yeah, please do. And look, if you're watching Avalanche, maybe holding some AVX in, genuinely wondering if that $50 mark is around the corner, and if you appreciate this kind of in-depth, hopefully balanced analysis that tries to help you cut through all the noise and hype out there,
We hope it does.
then please don't forget to engage with this deep dive. Seriously, liking this video, leaving a comment down below with your thoughts, even if you disagree with us, and subscribing to our channel if you haven't already. It really, really helps support what we do here.
It makes a huge difference.
It boosts our visibility in the algorithm, which means more people can discover this content. And honestly, most importantly, it lets us keep bringing you these high-quality crypto breakdowns and deep dives every single week. Your interaction is genuinely invaluable to us, and yeah, we do read every single comment.
We absolutely do. Okay, so here's a final thought to leave you with as you mull all this over. As Avalanche continues to boldly build out this expansive subnet ecosystem, attracting more and more enterprises, institutions, gaming studios to its unique architecture, will the sheer breadth and specialization of its applications ultimately end up fragmenting its value, diluting those crucial network effects we talked about?
Yeah.
Or will it instead ingeniously create an unstoppable network of networks, a truly interconnected web that fundamentally redefines what a layer 1 blockchain can be and propels it to completely unprecedented heights?
That's a multi-billion-dollar question, isn't it?
It really is. Something profound to ponder as we watch this fascinating space continue to evolve. Thanks for joining us. We'll see you next time on The Deep Dive.